Presented by eBix Cash. हर खुशी के लिए काफी है.
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take you through the headlines tonight. Profit booking snaps market's winning streak. Nifty below 18,300. Sensex slumps over 450 points. Metals, energy stocks drag. And the great fall of IRCTC slips 19% in trade today. Festive demand for air travel on the rise. Domestic air traffic count near pre-pandemic levels. Travel and travel aggregators offering festive discounts in a bid to lure customers. 200 crore rupee bank money heist thwarted. 3 HDFC Bank employees, 9 others held for trying to withdraw huge sums from an NRI account. Apple's iPhone partner Foxconn unveils electric vehicles, sets sight on making EVs in India, Europe and Latin America. The Indian benchmark indices extended their downward rally today. Heavy profit booking witnessed in realty and metal stocks. The sell-off was more significant in the broader markets, where small-cap and mid-cap indices dropped over 2.5%. All the indices trading in the red other than telecom. Benchmarks witnessed a sell-off now for a second consecutive session. The sensex was down nearly 450 points, seeing a 0.75% cut. Nifty saw a 150-point downgrade and it was about 0.83% lower in trade. Top laggards, Hindalco with a 4% cut, BPCL, Titan down about 2.5% each, Bajaj Finserv, HUL, some of the other losers in trade today. The top gainer, Bharti Airtel with nearly 4% of gains, followed by SBI, Tata Motors, IndusInd Bank and Adani Ports. We'll bring up some of those gainers for you also on your screens. As you can see, about a 4% on a Bharti, followed closely by some of the other movers. Tata Motors has, of course, been moving consistently of late. Analysts do believe that the ongoing correction is not an overreaction and it can sustain in the near term due to high valuations. IRCTC, one of the hottest picks in the stock market for the past 2 years, was in focus again today as it crashed over 19%, extending Tuesday's 15% fall. The stock has been in a downtrend since it hit its lifetime high Tuesday morning and has since eroded the wealth of its investors by a whopping 30,380 crore rupees. Experts believe that the stock, which gained 250% in the last 1 year, has made investors a bit cautious, prompting them to cash in on recent gains. Gaurang Shah, Senior VP, Geojit Financial Services, joining us on the story. Gaurang, what's your take on the sudden correction that we're seeing in IRCTC?
Hi, Abha. Good evening to you, and it's good to see you and speaking to you after a very long time.
Same here.
So, this 20% correction comes on fallback of the stock rallying more than 40-50% in matter of, I think, 2 or 3 weeks. And along with that, sometime back, you had the IRCTC stock getting included in the F&O segment as well. Right. And there was a mad rush. You have the news flow of stock splits by end of this month on IRCTC. Tomorrow is the weekly expiry. So maybe there was a rush to book profits by short to medium term investors, people who would have possibly taken some leverage position on the IRCTC counter in the F&O segment. But having said that, Abha, if I'm not mistaken, and I stand to be corrected, and if my memory serves me right, the IPO for IRCTC was in September 2019 at 320 rupees. And yesterday's high that you were just mentioning a while back, if I saw it correct, it was somewhere close to about 6,200 odd. So when you see stocks like IRCTC falling 30, 40, 50%, or maybe more in a matter of just 2 weeks, it is naturally to see profit booking. Having the fundamental monopoly play for the Indian Railways, and not only ticketing, it caters to various other services that IRCTC offer. So as a disclosure, we had a subscribe for the IPO back in 2019. And I think once the froth settle down and excess get wiped out, you will see some stability coming into the counter of IRCTC.
Gaurang, thank you so much for joining us and giving us a strategy to keep in mind at a time like this. India has slammed the decision of the group of oil-producing nations, OPEC, to hold crude oil production at levels and not increase it. In a meeting with global petroleum CEOs, the Indian government has said that OPEC's decision will hamper global economic recovery as well as hurt consumers. OPEC's decision has meant that crude oil is currently trading near three-year highs, with the benchmark Brent averaging $78.80 a barrel for the second quarter ended September. Pump level prices of petrol and diesel in India are at record highs and likely to rise even further as crude inches upwards to perhaps $100 a barrel levels. India has suggested a cap on fuel prices as well as urged major oil producing nations to ensure reliable and stable prices and supply. Listen in to Tarun Kapoor, Secretary, Petroleum Ministry, talking about this.
Efforts should be made to increase production so that when you know that the price is going beyond a particular range and that range is not easily digestible for the various oil consuming countries, importing countries. So the oil producing countries must immediately react. Can we rely on imports if there is so much volatility? So we have to look for whatever resources available within the country.
The Indian aviation sector, for long suffering from lockdown blues, is back with a bang. As vaccinations pick up pace and COVID cases decline, India is seeing a travel boom. Festive season has reignited the desire to travel, and travel aggregators are offering festive discounts in a bid to lure customers.
Tired and bored after being cooped up at home? Thinking about putting on your travel shoes? Well, be ready for serpentine queues and crowded terminals at airports. With the second COVID wave ebbing and vaccinations reaching the 100 crore mark, air travel is catching up with the pre-pandemic levels. With the onset of festive season, Indians are ready to leave town. Advance bookings for Diwali have seen a whopping 450% jump in advance bookings. Festive season bookings are close to 90% of the pre-COVID levels.
We talked about revenge travel all the time, but now is the time when we actually see it kick in. For example, during the long weekend of Ganesh Chaturthi, we saw 65% more bookings. And for Dussehra, we were seeing somewhere around 53% more bookings. The leisure travel is not just back, but it is gone beyond pre-COVID numbers, according to me. Corporate MSME travel is somewhere around 70 to 90% of what it was. And corporate IT travel is basically where I think it's probably at 40 to 50% of what it was before.
Domestic air travel has taken off in September and is expected to increase even more during the festive season. Airlines carried over 70 lakh passengers in September compared to around 50 lakh in July. Banking on the ongoing festive season, travel aggregator websites are doling out discounts for travelers. While Ease My Trip is offering 12% off up to 2,021 rupees on domestic flights, Make My Trip 2 is giving a 21% off on domestic flights. So where are Indians heading to? Within the country, Leh Ladakh, Rajasthan, Goa and Andaman are among the top picks.
Life is coming back to normal for all of us. There is such a large demand for domestic travel specifically to most of the destinations. And it's not going to be just Bombay or Delhi or Jaipur or Goa. I mean, there are people who are willing to travel into the hills in Uttarakhand. People are exploring Northeast. People are looking at Andaman. I think what India, probably the customers which never thought about domestic travel have suddenly want to go because of obvious reasons.
Interestingly, while 3 and 4 star hotels still have vacancies, top-tier hotels are already fully booked for the festive season. Meanwhile, the government may also do away with airfare caps by the end of this month. The last remaining sign of the troubled pandemic times. Bureau Report, Business Today Television.
Foxconn, the Taiwanese company, which is the biggest manufacturer of Apple iPhones in the world, is driving its electric car into India. The company had unveiled 3 electric vehicle prototypes on Monday, pegging their formal launch into the market next year. Foxconn is now looking at manufacturing these vehicles in India along with Europe and Latin America. The company usually works in a BOL model where it builds, operates and localizes with an indigenous partner. Already a major electronics manufacturer, Foxconn has set a target of building 10% of the cars or components for the global EV market by 2025. 12 people have been arrested in Delhi for an attempt to drain an NRI account in HDFC Bank. 3 of the arrested are bank employees. The bank was warned when the attempts to defraud the bank set off safety alarms.
It is one of the most audacious attempts to pilfer a bank account. A group had its sights on an NRI account in the HDFC Bank reportedly, with 200 crore rupees deposited in it. 12 people were arrested on Tuesday, 3 of them HDFC employees. According to the cyber cell of Delhi police, 3 attempts were made to steal the funds. First, one of the employees helped hackers get part of the account's online credentials. The plan, however, failed. Next, a second employee got a duplicate checkbook issued. This too failed. The third attempt was more enterprising. The gang got a phone number with the same digits as the last 10 of the account holders' US phone number and even had a KYC done. But this too failed.
Being a high value account and HDFC was also very careful and HDFC was a part of investigation with us. तो HDFC ने डेबिट फ्रीज लगा रखा था कि इस अकाउंट में अगर कोई ट्रांजैक्शन होगी तो until and unless the real account holder tells that a transaction is to be made, ट्रांजैक्शन फाइनल नहीं होगी. बट इन्होंने अपने किसी बैंक एम्प्लॉय के साथ मिलके उस डेबिट फ्रीज को भी हटवाया कि डेबिट फ्रीज आप 15-20 मिनट के लिए हटाएंगे, उतनी देर में ऑनलाइन ट्रांजैक्शन या चेक क्लियर करवा देंगे.
The high value theft failed with the first attempt, alerting the bank. Police was informed. Reports say the bank employees were offered as much as 10 lakh rupees and other inducements to turn accomplices.
So what can you do to ensure this doesn't happen to your account? Number 1, monitor the account every few days. This may be difficult, but it's absolutely necessary. Number 2, access your account online only in protected environments. Religiously avoid places that are offering free Wi-Fi and also keep your screens away from prying gazes. Number 3, the golden rule, keep your passwords safe. An age-old advice is to not have an easy password. It is, after all, your hard-earned money. Number 4, don't click on any web pages. Only click if the sender is kosher, or if you're really interested in opening the web page, go to the website and then go to the page. And number 5, keep your checkbook and your passbook safe. Do all of this and you ensure that your bank account is safe. With Bureau Inputs, this is Akshita Nandagopal for Business Today TV.
You're watching Ask Udayan, the show where we answer your questions on stocks. I'm Abha Bakaya, and with me our global business editor Udayan Mukherjee. The Indian stock market trading close to those record highs constantly, with some investors still not sure whether they've missed the party or whether they should book profits. What's the right strategy to maximize your wealth at this time? Udayan gives you all those answers every Wednesday. So do send in your questions. We'll answer a select few every week, and the number is on your screen. Starting off this week with our first viewer, Pearl. She's from Gurugram. Listen in to her query on TCS.
I have bought 50 shares of TCS at the average price of 2200. Should I hold or book some profit or buy some more?
Well, TCS has had a bit of a disappointment of late because of the results where the earnings numbers came in a little short of street expectations. But I think it's a passing kind of a phenomenon because volume growth was a little short of expectations and the margins were also a bit compressed. And there are some issues with attrition at TCS right now, which they need to resolve. So it's possible that over the next 2 or 3 quarters, we may have a little bit of a shrinkage in margins, and therefore the earnings numbers might have to be toned down a little bit. But TCS is such a strong company that I expect that in the next 3 or 4 quarters, those wrinkles will be ironed out, and the company will get back on the growth path once again, in line with earlier expectations. So the stock has corrected. I think it touched 4,000, almost touched 4,000 recently, and has corrected pulled back to about 3,600 odd. So almost a 9-10% correction, which is not meaningless in the context of TCS, has happened already. Now, if there is a deeper correction ahead because of market conditions and it gets down to those 3,400 kind of levels, I think that may actually present a great opportunity for long-term investors, because that's pretty much what the level that TCS was trading at the start of the year. And if you can get it at those levels once again, I think it makes a lot of sense for long-term portfolios. So yes, a little bit of a near-term disappointment, but not to worry for real long-term investors. This is an evergreen stock for a portfolio.
Okay, great. So that's on TCS. Let's take a look. We've got another interesting question from Simi Sinha, who is from Patna, and looking at Godrej Consumer. What's the outlook on that one? But first, let's hear her question.
Hi, Udayan. What is your view on Godrej Consumer? I actually want to invest for long term.
Well, Godrej Consumer, I think, is back in favor once again after a big lull because of the new CEO, Sudhir Sitapati, who's recently been appointed and taken over. He's got he comes with an enviable track record from HUL, and there is a lot of hope in the market that he will turn around Godrej Consumer's fortunes, which had flagged a bit through to 2018 and 19. They seem to be getting back on track now. It's a steady company with a good portfolio of brands. It's not as expensive as some of the blue chip FMCG companies. But if you look at household insecticides or hair color or soaps, it's got a fairly significant position in these markets. The mistakes that Godrej Consumer made, which is what led to a lot of disenchantment among investors, is that their capital allocation was poor in the past. I mean, they would have been growing at a steady rate and they would suddenly go off and make this large acquisition in Africa. And to digest that and to make it EPS accretive would take a long time. And they did it serially. And then investors started worrying whether this is a company which will keep on making these capital allocation errors. But now the new management seems to be saying that they want to focus on organic growth. They've got a new man at the helm who will further solidify the existing portfolio. So one can expect that Godrej Consumer will not make any major misadventures like they made in the past. So I think this is a good moment for investors to look at Godrej Consumer and give them the benefit of doubt for the next couple of years, see if the new CEO can actually get the company onto that 15% plus kind of an earnings growth trajectory for the next many years. So I think it's a company to probably bet on and hold on to for the moment and see if the new CEO is delivering.
Okay, here's a query from Samarth Pradhan, who is from Mumbai and looking closely at some of those JSW Group companies.
What is your view on investing in JSW Group as a long-term investment plan?
Well, in the JSW Group, the two companies that I look at are JSW Steel and JSW Energy. They're very different kind of businesses. But I think of the two, JSW Steel probably I would peg a bit higher, despite it being a commodity company, because the commodity upcycle seems to be fairly strong at this point. JSW Steel's numbers, or profit numbers for the next, or even cash profit numbers over the next couple of years are expected to be very strong, as they typically are in upcycles. You just need to be a bit careful about the balance sheet because they have quite a bit of debt on their books, but I think they would be able to service it with such strong profitability. So I think JSW Steel, where the stock is also pulled off a little bit from the year's highs, is a stronger investment case given the kind of commodity market conditions we are witnessing at this point. JSW Energy is also an interesting thing because they traditionally have a lot of these thermal and hydropower generation plants, but they're now trying to make a transition to renewable energy. Now, the street is so excited by this transition plan that it has actually priced in much of the good news well in advance. So the story is good. If JSW Energy moving to renewable energy, and over the next few years, if it does that, it makes for a very strong investment case. But at 400, the stock is already trading at 50 PE multiples, and that kind of PE multiple for an energy company is almost unheard of. So I think the problem which I have with JSW Energy is the price point for investors, not necessarily the story, which is evolving into a fine one. So at this point, at this price level, I would say if you're looking at the group, probably JSW Steel makes more sense than JSW Energy. But if energy were to pull back significantly in a correction, one could look at that again.
Okay, Bharat Electronics, that's the last stock we're focusing on for today. And Varsha has that question. Then let's listen in to the query first.
Hi Udayan. My question is, I have 1,000 shares of Bharat Electronics at an average price of ₹80. Should I hold or sell it?
It's a good PSU stock, and I won't say that for too many public sector companies, but Bharat Electronics is a good one. It's regarded by the market as a pure defense play, but what I like about the company is that they actually have a lot of non-defense opportunities opening up now. I mean, if you look at the spaces like airports, healthcare, infrastructure construction, transportation, I think these are areas where BEL probably stands poised to capitalize quite significantly on, other than the defense opportunity, which is quite strong. If you look at the order book of the company, is very healthy at 4 times current year's revenues. So there is clear visibility about how strong sales growth would be. The management is consistently guiding to 15-20% sales growth over the next couple of years. So you've got a healthy revenue base, and I think profits can also grow at 15-20% plus. It's not a terribly expensive company, which is not something that you can say for too many mid-cap companies. I think it trades at about only 18 to 20 PE multiple, depending on which year you're looking at. And for a 20% ROE company with 18-20% profit growth, 15% plus revenue growth, good order book, and fairly strong management, I think Bharat Electronics is one of those rare public sector companies which could continue to compound your wealth very nicely over the next few years. It may not be a firecracker, but I think it's a nice compounding machine.
All right. That's all we have time for on this edition of Ask Udayan. Udayan, thank you so much for your time. Always great to hear some of those strategies on how to assess stocks and make sound investments. That's all from us. Do send in your queries. We'll take more of those next week.